Hey, good morning, everybody, and welcome to Coffee with Great Wealth Strategies. This is Eric Kenyon, also known as Regular Joe. I'm here to fill up your cup of coffee, your Joe, so that you'll pass it around and share this information. I've got some really cool tax strategies that I found, and I found it in a very unlikely place. And a friend of mine in Virginia had sent me an audio CD. He's a distributor for a company that sells some shakes, and a gentleman by the name of Bob Schmidt was on there. I mean, their approach with what this company was doing was why start a business, and the real reason is all the massive tax advantages. So this guy, Bob Smith or Schmidt, put together this CD what my friend sent to me, and it's got at least 20 fabulous ideas on tax strategies that you can use and implement today, and why it's so important to start a business. And I thought I'd share it with you guys just like my friend shared it with me. It's about 45 minutes long, and it's an audio file, so there's no video after I get done here. You'll just be listening to it, and you can listen to it in the car, download it onto your iTunes and check it out. But I highly recommend it. I've listened to it twice, and I'm going to implement at least probably a half dozen of these strategies to increase my net worth, and I thought it would be very helpful for you guys to check this out as well. So enjoy. Thanks.
Hi, this is Bob Schmidt. Thanks for listening. I'm going to do a quick financial overview because, like it or not, money controls our lives to an incredible degree. Where we live, where we go to school, what we drive, where we golf. And I don't know about you, but in all my years of formal education, the only thing I learned about money is how to spend $30 on a chemistry book I didn't want and how to eat on $1.50 a week, which I could barely do even back in those days. And I seem to miss the course on Wealth Building 101 and Wealth Building 102, so I'm just going to do a quick overview. There's a wonderful book called Choices by Dr. Shad Helmstetter. It's out of print, but you can usually get it on Amazon on the used book department. But he makes a powerful point that how your life turns out, certainly spiritually, socially, intellectually, and certainly financially, has very little to do with ability, and it's got everything to do with the choices you make. Nobody sets out to be broke. Nobody sets out to be lonely. What are our options financially? And if you're in exactly the position you want to be in financially, God bless you. But if you're not, you have 4 options to change your situation. Make more, spend less, dramatically reduce your taxes, which is what we're talking about here. It's the quickest, simplest, and easiest strategy. Take the money that you save and put it into investments. And 4th, get out of debt and take the money that you use for payments and interest and invest it. Now, when it comes to generating income, you have 2 choices. Do it yourself, work more hours, or try to make more per hour. Do it through investments, or do it in the business world. Whether you subcontract, joint venture, or you have a traditional business. Those are really our only options. But we're here to focus on taxes. You know, when you really look at the tax situation, almost half the national income goes to the government. Now, I'm not here to get into politics, but do you realize when you buy an airline ticket, virtually half of the price of that ticket is fuel taxes, corporate taxes, employee taxes, sales taxes, on and on and on, almost half the price of a ticket and almost half the price of a gallon of gasoline, if you look at every layer of taxes, is 50%. So taxes are huge. Now, some of them we can't avoid. Sales tax, if you're going to buy a new car, it's pretty tough to avoid unless you live in Oregon and you don't have a sales tax. But federal income tax and state income tax are things that are very controllable. By having your own business, by positioning yourself properly, you can minimize those taxes. For example, 50% of the people in California rent. 60% of the people in my state, Nevada, rent. And for somebody to rent, because renters have virtually no tax leverage, for somebody to rent and not have a home-based business for tax leverage is just, it's craziness. And so this tape is all about what your options are, the choices that you have at your fingertips to dramatically decrease legally and ethically your tax burdens, and not only that, but generate more money and protect it. Because I like to share with people, it's one thing to make the money and it's another one to keep it. But this tape and this book is all about, again, it's not what you make, it's what you keep. About legitimate, ethical strategies to minimize the amount of money that the government takes from you and free that up to add to your lifestyle in your investment portfolio. This could very well be the most valuable financial time you've ever spent. Pay attention, because you're going to have some options. You're going to have some choices, because you no longer can say, I didn't understand, I didn't know. You will know what your options are and the powerful tools and strategies that you have at your fingertips if you choose to utilize them. I just encourage you to listen closely and make good decisions. Good luck.
Good afternoon. I'm Carolyn Johnson, independent distributor for Zango, and we're here today with some great news for you. Most of you, like me, have been told that you get a lot of great tax advantages when you work for yourself, even if it's a part-time home-based business. Well, the good news is someone has finally written a book in plain English to teach us what these huge tax breaks are that we can qualify for as owners of a Zango home-based business.
And I'm Tommy Johnson, also an independent distributor for Zango. And I'll bet none of those well-meaning people ever told you what those tax advantages are, or how to qualify for them, or what records you'll need to keep. I'm not a number cruncher kind of guy. To be honest with you, I hate taxes, and I especially hate reading about taxes. But when I first saw this information, I was absolutely blown away by how easy it is for the Zango business I am already running to qualify me for some really big tax savings.
So Tommy and I tracked down the author of this tax saving guide, which is appropriately titled, It's How Much You Keep That Counts, Not How Much You Make. When we spoke with him, we learned that he is also a Zango distributor, so we just had to get him in the recording studio with us.
We're sitting here today with Ron Mueller, the author of It's How Much You Keep That Counts, Not How Much You Make. Ron has a bachelor's degree, 2 master's degrees, an MBA, and a PhD. So clearly, Ron knows how to do the thorough research.
You know, Ron, sitting here looking at your book, It's How Much You Keep That Counts, and showing that it's your 4th edition, maybe you could kind of tell us how come a fellow that's not an accountant or a CPA would come to write a book like this?
That's a great question, Carol. In fact, I didn't really come to write a book. But what I came to do was to be in business for myself. And about 7 or 8 years ago, I was tired of following taillights and sucking up exhaust fumes and decided I want to work for myself. And like you, I'd always heard all my life you get a lot of tax breaks when you work for yourself. So I went to the library to find a book that would tell me how big those tax breaks were, because what I was trying to figure out was how much money I need to make in order to be equivalent to what I was making as an employee. Well, I couldn't find a book that gave me that information, so I went online to look for it. I went to Amazon.com, I used search engines, I did everything. I couldn't find it. I even went to the Library of Congress because at that time I lived near Washington, and the Library of Congress has a copy of every book ever copyrighted in America, and it wasn't there. So I said, okay, I got to figure it out myself because, see, part of my background is I've been an investigative reporter. Investigative reporter is simply somebody who lets every lead to another lead to another lead. And so what I did was I started tracking down the tax breaks that I thought were correct, that I'd heard about, and I tracked them back to the individual tax code article or congressional law or tax court ruling that authorized it. And then I got intrigued because I'd found 2 or 3 of those. How many more are there? And I just kept going, and it got to where I was now like 6 months into doing this part-time, and somebody said to me, you know, millions of people need this information, especially network marketers, because there's so many tax breaks they can qualify for that they don't even know about. And that was frankly the first time I ever thought about turning it into a book.
Wow.
I turned it into a book so that I could share the knowledge that I'd gained the hard way and deliver it to people in a way that they don't have to work the way I did. Nobody wants to study taxes. They find it boring, and so I need to deliver it to them in a way that they can understand it quickly and easily and use it right away.
Well, you're absolutely right. As you were sitting there saying millions of people need this information, I'm sitting here thinking millions of people need a Ron Mueller, because I am not a research person. So we really appreciate the time you've taken from your schedule. I know you're a busy person to be with us in the studio today. You know, you've recently completed, as I said, the 4th edition of your book. Well, I know this, Ron. Your tax savings guide helped me this year personally. It helped me with saving thousands of dollars in my taxes. You know, since the tax breaks you describe in your book are so easy to use and the tax savings are so huge, I've just asked you, Are these tax breaks really legal?
That's a great question because everybody worries about doing something about their taxes. And there are so many people that overlook legitimate tax breaks just because they're afraid of the IRS. You're always afraid of something you don't understand. But what I can assure you of is that I've taken each one of these tax breaks back to its origin. And so I've even found the logic behind where they came from. See, Congress passed a series of tax break legislation specifically to encourage people to get into a home-based business. Now, why'd they do that? Well, they started discussing this many, many years ago, probably almost 20 years ago. The first time we had mass layoffs in this country where IBM, McDonnell Douglas, and Boeing are laying people off by the thousands. So, and it threw our country into a recession, almost into a depression. I don't know what the difference is between those two, but I do know that a lot of people didn't have much money. And so it threw our country into a serious economic problem. So Congress sitting around trying to decide what can we do to lessen the impact of this next time it comes around, because history tends to repeat itself. Well, they said, well, if everybody had a home-based business, we'd all have a backup plan. If you went to work tomorrow morning and you got a pink slip that you didn't know about, or you didn't know was coming, what would you do? Most people would go home and start working on their resume or have a beer or try to forget it or something. But what you would do is you'd go home and say, okay, my Zango business, I've been working part-time. Let's crank it up to full-time. It'll buy me time while I look for another job. Funny thing is a lot of people don't find another job because they find out they can have more fun, more time freedom, make more money by cranking up their part-time business to full-time, so they never go back to work. But that's the reason why Congress passed this legislation. So they asked themselves, how do we get people to get into a home-based business? We know that's good for the American economy, but people are overworked, overstressed. Some of them have 2-3 jobs already. How do we convince them to do a home-based business? Well, most people are motivated by money. I mean, money's not the most important thing in the world, but it kind of ranks right up there with oxygen. And so Congress said, if we can't pay people to get into a home-based business, what can we do? And they said, then the light bulb came on, the aha. We can pay people. We can pay them in terms of giving them tax breaks, give them really significant financial incentive to take the time to start a home-based business. Some of them are going to make it really successful. You know, that takes away a lot of taxes, of course, initially. But some will make it hugely successful, and they'll end up paying way more taxes than they would have otherwise. And we've got that foundation of the security blanket that if our country goes into economic problems again and there are mass layoffs, people have something else they can do immediately. They don't have to study it because you've already done that. You already understand the product and the services. So that's why Congress passed these tax breaks. So absolutely, of course, they're legal.
Okay.
Ron, I have a real estate background, and I'm very familiar with the tax break that the IRS give us for owning real estate. If these tax breaks for home-based businesses were all passed into law by Congress, why don't most people know about them? Not even my own tax guy.
Well, that really requires a two-part answer. The first part is why most people don't know about these tax breaks. And the answer that I've concluded is that when Congress passed these tax laws, they didn't pass any PR plan or advertising plan to tell people about them. Normally, the media would announce these things, but for some reason, the media didn't make a big deal out of them because most of these tax breaks were sandwiched into larger tax bills, and the media simply didn't pull it out. And it's not even tested in the CPA exam. So if a tax preparer knows about small business tax law, it's because he or she is self-taught in that area. See, most people don't know what they don't know. And so an accountant has a reasonable right to believe that everything you learn in accounting school, the things that are tested in the exam, are in fact the most important things that they need to know. There's a big category they don't know, but they don't know it, if that makes any sense.
Right.
Absolutely.
So as a result of that, maybe 5% of tax preparers really understand this because they're the ones who have decided to carve out a specialty in this area, and that's why they taught themselves a small business tax law.
Okay. Well, that makes a lot of sense. You know, give us just one example of a tax break that has a huge dollar value and is also got very easy record-keeping requirements, which we all don't enjoy doing.
Chapter 7 of my book is called The Key to Your Biggest Single Deduction May Be in Your Ignition, because the biggest single tax deduction for most people is their automobile. Using your automobile for business purposes can yield huge tax deductions. For example, the average person will get, for every 2 miles you drive, you get about $1 worth of tax deduction.
Oh, wow.
That's pretty significant. Yesterday, I drove 400 miles to come here for this conversation we're having, and that 400 miles resulted in about $200 worth of tax deductions.
Whoa!
So it's significant, the amount of tax breaks you can get with a home-based business, coupled with use of your vehicle. Now, you asked about the record-keeping requirements. It's so simple. I'm amazed that a lot of people don't take this tax break because they think it's too complicated. The record-keeping is too complicated. Here's how simple it is, Carolyn. If you get in your vehicle and I get in my vehicle, I fasten my seatbelt, I turn on the ignition, and then I pull my vehicle mileage log out in front of me. I have to write down only 4 things. Today's date, that's usually the hardest one for me. Then I write down the odometer reading. I read that right off the dashboard. I look right through the steering wheel, write it down. And then I write where are you going and why are you going there. So what's your destination? What's your primary purpose? That's it. I write that down every time I turn on the ignition, but only for 90 days. I don't have to do it all year long because the IRS has ruled that you can use a statistical method to determine your deductions. So during this 90-day period, for example, if I find that 87% of my total miles traveled are business miles, I can now claim 87% of all of my miles for the entire year as business miles. And that multiplied by 48.5 cents a mile is a big deduction.
Well, that adds up in a hurry. I had no idea you only had to keep track for 90 days.
Ron, last night you and I were talking, and you made mention to the fact that if your vehicle gets at least 7 miles to the gallon, that you, in a sense, can get paid to drive your vehicle. How does that work?
Well, that's right, because you get approximately $1 worth of deduction for every 2 miles you drive. And so if the price of gas, let's say gas is $3.50 a gallon, even $3.50 a gallon even, you only have to drive 7 miles in order for that to total to enough money to pay for your gas. So literally every time you fill your gas tank, it costs a lot of money, but it's a little less painful to pay that money when you know you're going to get back multiples of that in tax breaks.
Mm-hmm. I'd say a lot less painful. Somebody told me that all I have to do is put a magnetic sign on my vehicle promoting my business. All of my miles would be deductible. Is this true?
That is one of the most commonly held misperceptions about tax breaks. In fact, it's so widely misunderstood that the IRS has actually issued a clarification on it, and they said that they've said that if you put a magnetic sign in your vehicle, 100% of the cost of that sign is deductible. Mm-hmm. Of the sign.
The sign.
That's all.
Mm-hmm.
Has nothing to do with the vehicle deductions. What's the car being used for? Now, in theory, if you were driving your car around in order to be a traveling billboard, then it could be all deductible. But at the price of gasoline, who in the right mind would do that? So no, it's not. It's not deductible. But you bring up a good point. There's more misinformation than accurate information about small business tax breaks, and people are trying to take the wrong breaks. They just don't understand the law.
Gotcha. For many of us, a lot of miles that we put on our vehicle are for commuting to and from a job. Commuting isn't deductible, is it?
Commuting is never deductible. However, there is a way of converting your commuting miles into tax-deductible business miles under what's called a two-business location rule. The first thing that's important is to understand, to think of your home as a place of business. Now, I suggest to people, think of your home address. Mine's 4755 Frazee Road. Okay, that used to be where I lived, and I also had a home-based business there. But 4755 Frazee Road is now where my business is located, and I also sleep there. If I think of it that way, I think of my home address as a place of business. Two business location rule says travel from one place of business to another place of business is deductible as a business expense. So if I get up in the morning and I activate my home-based business, let's say I contact some Zango prospects, or I return some emails to my Zango downline that have questions. I've activated my home-based business then. Now I point my car in the direction of my W-2 job, my JOB, or just over broke, and somewhere along the way, to make sure this deduction sticks, I make a brief stop, a brief business-related stop. Zango business-related stop. Mm-hmm. So I only buy coffee now at coffee shops that have community bulletin boards. I only take my dry cleaning to dry cleaners that have a community bulletin board. Why? Because I can stop and put my business card or my flyer on that bulletin board, and while I'm there, I buy coffee.
Oh, wow.
So if you make that one brief stop on your way to your W-2 job, you work that job, on your way home do the same thing, come back home, reactivate your home-based business, which is impossible not to do. Mm-hmm. You're going to have to answer your telephone messages or answer emails, if nothing else. Then that makes the entire trip now qualify as business miles under the two business location rule.
So a change in mindset is helpful.
Absolutely. A change in mindset, both in terms of where you live being your primary place of business, and a change in mindset in terms of thinking about your travel as being commuting. You're now traveling between one business location and another business location.
Wow, that's awesome. Ron, for the average person listening to this audio, how much can their car save them in taxes?
The AAA says that this year the average person is going to put about 15,000 miles in their personal vehicle. Now, a person with a home-based business probably puts even more on that, but conservatively, let's use 15,000 miles. And conservatively, let's say that 85% of your miles are business miles. Usually it can be much, much more than that. But let's say it's 85%. We take 85% of 15,000, multiply that by the 48.5 cents per mile that we get as a tax deduction, and almost anybody then will end up seeing a tax deduction worth at least $5,000 for using their vehicle in their home-based business.
$5,000.
$5,000. See, where people cheat themselves a lot is that they need to run a personal errand. They need to go to the grocery store to buy groceries. Well, I only shop at grocery stores with community bulletin boards.
Oh.
I go there because all I have to write down on my vehicle mileage log is my destination and my primary purpose. The taxpayer decides what's the primary purpose when you have two or more purposes. My primary purpose is to go to make sure my flyers and business cards are still on the bulletin board. While I'm there, I can shop. Then when I come home, that round trip is tax deductible as a business trip because I legitimately conducted business on that trip.
Well, $5,000 can send you on a cruise to the Caribbean, you and your family.
It sure can.
It could also buy you a lot of Zango tools to help build your business.
And remember, this is one of many tax breaks that home business owners can qualify for real easily.
You know, let's talk about the Zango business for just a second. You know, I know that you are an independent Zango distributor as well.
That's right.
And one of the questions that we get asked and people are concerned about is, you know, are their startup costs and their monthly auto ship costs deductible?
It used to be that startup costs were not deductible. That tax law has been changed this year. And now startup costs up to $25,000 are deductible. So certainly the small amount of money that someone pays to become a Zango distributor is deductible as a startup cost. Startup cost is defined by the IRS as those costs you incur prior to receiving your first revenue check, making your first sale, for example. So those startup costs are definitely deductible. And as far as the product is concerned, the auto ship has not been clarified by the IRS or by tax courts as to whether or not they're deductible. Many people believe, many tax preparers believe, that it should be deductible because if you don't participate in the auto ship program, you don't participate in the bonuses either.
Exactly.
So it's part of the cost of doing business. And actually, people in Zango have an even better opportunity because they could deduct the product as a healthcare expense because the tax court has said that any time that a person is taking any product to cure or prevent a condition or illness, it's deductible. So if I take vitamin C because I want to prevent colds, that vitamin C is deductible because I'm taking it to prevent a condition or illness.
Oh.
If I'm taking Zango because I've got arthritis and I believe Zango helps me with arthritis, then that's a tax deductible expense as a medical expense. So either way, anybody in Zango can deduct the costs of the products that they purchase and consume themselves.
Well, that's great. I wasn't aware of the vitamin C analogy, but that's a great one.
I'm getting more and more excited as we go.
Yeah. Well, we're learning new things every minute. I want to know, is it true that some of our personal expenses can also be deducted? One of the things that I noticed when I was looking at your book was you listed 50-some different items that are tax deductible as a business owner. As I went through those, some 25 or 26 of those items are items that we occur on a daily basis regularly that as an employee would not be tax deductible.
That's right. As you say, we're incurring those expenses anyway. The difference is we're currently paying for them in after-tax dollars. What's that mean? If you have a bill worth $100, you've got to earn $150 to have $100 left to pay that bill. But now if you can convert that bill into a tax-deductible business expense, you now only need to earn $100 to pay that $100 bill. What bill is that? Well, for example, utilities. If you determine that 25% of your home, for example, just to pull a random number out of the air, if 25% of your home is being used regularly and exclusively for your home-based business, then 25% of all your utility bills are deductible. 25% of your rent or mortgage insurance is deductible. 25% of the general maintenance expenses on your home is deductible. So a lot of the expenses you already have suddenly can be converted into business expenses simply by having legitimate home-based business run from home.
Wow.
A couple of times you've used the term, if you qualify. Is it hard to qualify for home business tax breaks?
No, it's real easy to qualify for them. The IRS lists a bunch of requirements, but they all boil down really to about three. One is that you have to be working your business with a profit intent. You can't be working it like a hobby. Right. You've got to run it with the intent to produce a profit and be able to prove that. Now, how do you prove that? Well, you prove that with the evidence. You've collected prospect lists. You followed up with prospects. You're trying to bring people in. You're earning commission checks. But you don't need to make a profit in order to begin taking the tax breaks. The second one is to work your business on a regular and consistent basis. That's the way the IRS has worded it, regular and consistent. Regular and consistent is not defined as a lot of time. In fact, the tax courts have ruled in favor of a taxpayer who said she worked her business an average of 45 minutes a day, 4 to 5 days a week. The tax court said that's regular and it's consistent, so that qualified under that.
So when we talk to a distributor about being consistent with their business, there's really lots more reasons than just building their business to be consistent.
Oh, that's right. If they stop running their business on a regular and consistent basis, then they stop qualifying for the tax breaks. That's one of the requirements. And the final requirement is that you run your business like a business. So that means you don't just work your business when you're at lunch with your colleagues. You don't just work your business when you're playing golf with the people you're running into on a golf course. You run your business like a business. You've got a business plan. You've got an objectives. You've got people you talk to on a regular basis, and et cetera. So if you do those three things, you have a profit intent, you run your business on a regular and consistent basis, treat it like a real business, you'll qualify as a business giving you all these tax breaks.
So things like meals, trips, mileage, meetings, tools to build your Zango business, they qualify?
Absolutely. If the primary purpose for incurring the expense is business related, then they qualify. Now, there is one exception on meals, is that meals and entertainment are only deductible at 50%. But if the primary purpose of that meal or that entertainment is business, then it absolutely qualifies for the tax breaks.
Great.
Ron, what about conventions and out-of-town business trips when you come a few days early, maybe bring your family or stay an extra couple days after the event?
Well, Tommy, business trips are always deductible. So the question is how's a business trip defined? If your primary purpose for travel is business, and you in addition you decide to stay a few extra days or come a few extra days early for quote playtime, then the entire trip can still be tax deductible as long as more than half of your days on your trip qualify as business days. What's that mean? Well, the day of travel is always a business day, and so the day to and the day from are both, well, so you got two of them knocked off right there as travel days. And then you're going to be going to your convention, so that's probably a couple of days, so two more are knocked off, so now you got four. And let's say that on one additional day you have a pre-scheduled meeting with someone that maybe only takes a half an hour, but it's pre-scheduled, so it qualifies the entire day as a business day. You've now got 5 days as business days, so you could add to that 4 days of pleasure, and all of your travel, all your hotel, all your ground transportation, and half your meals will still be totally tax deductible.
Awesome.
Wow. Another thing that I read in your book was that if we hire our own children, that we get additional tax deductions. That's just awesome. Can you tell us a little bit about that?
That's one of my favorite tax breaks. My favorite because it gives us a way to reduce our taxable income, gives us a way to put real money in the pockets of our kids that's tax-free money, and a way to teach our children about handling finances. You can hire your children as young as the age of 7 in your home-based business. The tax courts have ruled on that, so that's black and white. Now, the work they do has to be appropriate for their age level, and the wages have to be appropriate for the type of work they're doing. But starting at age 7, there are things kids can do. They can empty the company trash. They can clean the company office. So there are things a young child could do. As they get older, they can do more and more valuable things like managing databases, for example. As long as the money you pay them is roughly equivalent to what you would be paying someone that you're hiring that was not a family member, then all the dollars you pay that child are tax deductible to you as a business expense, and the income is tax-free to them up to the level of the personal exemption for that particular year. Like in 2005, for example, the personal exemption is worth $5,000, so a child could earn up to $5,000 tax-free. In fact, they don't even have to file a return. The child labor laws don't apply for a child working for their parents in a home-based business, and you don't have to withhold any Medicare or Social Security or any kind of withholdings. So it's a very great way to put tax-free money into the accounts of your children to help pay for the cost of raising your children or to help build an account that they'll have available when they graduate. See, when I told my daughter when she started working for me that she could withdraw all the money left in her account when she turned 18 or when she graduated from high school, whichever came second.
I'm going to use that one.
That's great. What about any other tax breaks that you'd like to discuss with us for home-based business that are significant?
Well, there's several I could mention, but one that is significant that surprised a lot of people is health-related expenses. As I mentioned earlier, anytime any money you spend on health-related products or services that are directed toward curing or preventing a disease or condition are deductible. But for most people, they can only deduct health expenses in excess of 7.5% of their taxable income. So most people never get to that level, and so they don't have any deductions unless it's a catastrophic illness. But here's a way that you can get 100% of your health-related expenses covered. You hire your spouse. The Zango distributor hires his or her spouse to help them with the business, and the wages, of course, then are tax deductible to the business. But then because the spouse is now an employee and you're now an employer can give an employee benefits, right? So you, the employer, give your spouse an employee benefit. That's called a self-insured health care reimbursement plan, which simply means that I, my business, will reimburse you, my employee, who happens to be my spouse, for all health-related expenses that are not reimbursed under any other health plan, for you and your family. Now, who else is in my spouse's family? Me. and the kids. So I've now found a way to deduct every single penny of health-related expenses without having to meet that 7.5% threshold. Every penny that I spend on aspirin even, not just Zango product, but even aspirin, is tax deductible.
So what you're saying is that the average taxpayer can save thousands of dollars each year by qualifying for some of these home-based tax breaks.
Oh, yeah, and just with this last one that I mentioned, a lot of people don't think that's a big deal, but if you start adding up the co-pays, the things you buy over-the-counter in a drugstore, the average family spends between $3,000 and $4,000 on those kind of non-reimbursed items. That's $3,000 to $4,000 worth of tax deductions that you're overlooking if you don't have a home-based business.
Wow, gosh, Ron, that works out to about $300 a month. I mean, isn't it a shame that we have to wait until April 15th to get it back?
Oh, that's the beauty, Carolyn. You don't. Congress told the IRS to stop gouging home business owners, essentially. They said nicer words, but stop gouging home business owners and don't make them wait till April 15th. So here's how that works. You can change the amount of money withheld from your paycheck. So if you have a regular 9-to-5 job, a regular W-2 job, before you even see your paycheck, a big chunk of it is taken out for taxes, right?
That's true. Absolutely.
Most people don't even know how much. It tends to be more than you pay for your food, your home, your clothing, and your cars combined. It's your biggest single expense. Most people don't even realize that because they don't look at their pay stub. But let's say you're having $1,000 a month withheld from your check for taxes. That's $12,000 a year. If you now establish a home-based business and understand all these tax breaks you can qualify for so easily, you might cut your taxes by 40%, for example. And that's not exaggeration, by the way. Many people qualify for that. So let's say your deductions reduced by 40%. You can go to your payroll office, change your W-4. That's that half-page form you fill out your first day on the job that tells your employer how much of your money to keep and give to Uncle Sam. You change that W-4, and you have, instead of having $1,000 a month withheld, you have $600 a month withheld.
And there's no problem with that.
There's no problem with that. It's absolutely legal for any taxpayer can change his or her W-4 anytime in his or her opinion their tax circumstances have changed. The employer is required to accept that revised W-4, and they're required to implement it as of the very next pay period. So guess what happens to that $400 that used to go to Uncle Sam that you're now saving? It winds up in your paycheck. So that means you're going to have, in the example we just given, you're going to have an extra $400 of extra cash in your pocket you didn't have before. And that starts immediately as of your very next pay period. So the beauty of that is that's more than enough money to pay for getting into and running your Zango business. You actually make a profit before you ever get your first commission or bonus check.
Did I hear you right? By qualifying for home business tax breaks that will reduce my taxes by $4,000 to $5,000 per year, I can actually get an additional $300 to $400 per month increase in my take-home pay?
With the example we gave, yes. Now, for some people, maybe a little more, some maybe a little less. I don't personally know of anyone who put less than an extra $200 a month in their pocket, so almost everybody gets at least that much. And for most people, it could be anywhere between $400 and $600, I found, on average.
Right, and that's for as long as they're working, right?
That's right. That's for the rest of their working lives.
Well, you know, the great thing about that is that extra $300 or $400 a month is more than enough for people to cover all the costs of starting and running an active Zango business. And that's really important, especially since you say that it can include your own personal consumption. So, in effect, Uncle Sam is paying me to try to make a profit.
Uncle Sam will pay you to start and run a home-based business. Exactly right. You do not have to actually make a profit before taking the tax deductions. In fact, it's even better than that. Let's say you make $30,000 from your regular job. And let's say you're new to Zango, so you only make maybe $5,000 this year. That's $35,000. Now, your $5,000 home-based business may generate $20,000 worth of tax deductions. You can take those other $15,000 worth of deductions and apply that against your W-2 income.
Wow.
It's against all sorts of income. It's your W-2 job, it's rental income, it's investment income, and those deductions can be applied against any source of income, not just your W-2 job, but also against passive income, rental income, profits on investments, for example. So the home business itself can generate tax deductions far in excess of the amount of money the home business is making. Now, that means that on paper, that home business is in a loss position. It will be at least for a few years if you're really into this business seriously, because since you've got somebody else already paying for the cost of your business, called Uncle Sam and an Iris, that means you don't have to take any of the money out of your commissions and bonuses to pay those your regular operating bills. Well, if you took that same money and plowed that back into your own business, by buying more tools, by going to more conventions, by being even more actively involved, giving away more sample product. Plow it right back into your business, which is a smart thing for any business person to do. You're going to be in a lost position on paper for at least a few years. And it's important to also note, because I don't think I mentioned this before, that you begin getting these deductions on day one, the day you activate your business, not the day you sign up. If you sign up to be a Zango distributor and you wait a week before you get started, you lose a week's worth of tax deductions. But if you sign up and you get started immediately, as of that day, you're in business, and all these tax deductions we're talking about apply.
Listening to you, Ron, I'm really starting to understand why some of the books I've read by some great authors, Jim Rohn and Robert Kiyosaki, and my personal mentor and favorite, Bob Schmidt, suggest that everybody that works a job should be building a legitimate home-based business while they're working.
The author of the foreword to my book is Robert Allen, a well-known business book author. He's had, I think, 5 books now on the New York Times #1 bestseller list. On the front cover of my book, I quote Robert Allen as saying, "Anyone with a home-based business needs this book. Anyone without a home-based business needs it even more."
I like that. That's what Bob Schmidt would say as well. One of the things that I hear something about that I've had several people ask about or comment on is a 3-year rule that says after 3 years, if you're not making a profit, you can't continue using them as deductions. Can you address that?
That's another widely held misperception. That rule exists, but that rule applies to income-producing hobbies. So if you have a hobby, let's say you make quilts and you sell those quilts, you can deduct up to the amount of money you invested in that hobby, up to the amount of money that you made from that hobby each year, as long as you're making a profit 2 out of every 5 years. That's a hobby loss rule. That has nothing to do with a professional business, however. You're in a business, and there's no defined limit to how many years you can be in a loss position before you begin making a profit. As long as you can prove that you're attempting to make a profit, there's no defined limit to how many years you can claim a loss in a row.
Oh, that's kind of interesting. I'm glad you clarified that, because there are some big businesses that declare losses every year and continue to be in business year after year. So
Amazon.com, I believe, in their first 10 years in business, declared a profit one calendar quarter out of 10 years.
That's what I heard.
Because they could always prove that they're intending to make a profit. Why'd they lose money? Because they're plowing it back into the business. That's a smart business move.
Ron, a little while ago you mentioned of taking your tax savings and applying them into building your Zango business. I just want to support that, because when I got started in Zango, I took my tax savings and applied them towards my product and the balance into tools, and my business grew much more rapid because I was able to do that. I'm really excited because this information gives us a brand new recruiting and closing tool, doesn't it?
Oh, absolutely. It gives people a good reason to want to not only get into the business, but to stay active in it. It's also a great retention tool, because you remember, you have to be actively involved in your business with a profit intent and run your business on a regular and consistent basis. So if you work your business even the minimum 45 minutes a day, 4 to 5 days a week, you're going to accidentally sponsor somebody or find a customer.
Yeah.
But if you stop running the business on a regular and consistent basis, you lose the tax breaks. You got to start giving that $400 a month back to Uncle Sam again.
Ooh.
Jeez, I don't want to do that. Our retention in Zango is super high because of the product. But I feel that if everybody understood the tax benefits of having a home-based business, that you would never lose a single distributor or business partner.
Well, a person should never go into business for the purpose of getting tax breaks. But they should be aware that when they go into a business, they get substantial tax breaks. There's a slight difference there. If they go into business for the tax breaks, then they're going to work the minimum that's required by law in order to qualify for the tax breaks. You really want the motivator to be the business that they're in. And if they stay motivated and committed and excited about that product, that service, that business, then they'll automatically generate tons of tax breaks.
That's great. Ron, a lot of people I work with ask me how or when should I incorporate. How would you answer that?
I usually answer that by saying when you have too much to lose by not incorporating. So you want to be a sole proprietor in the very beginning, because it's much easier to take the tax breaks. You don't have any kind of records to keep, corporate records to keep, and that sort of thing. But when you get to a point where you're building up a significant residual income, that's when you do want to incorporate, and here's why. We're in a litigious society. People are suing each other all the time. If you happen to be somebody that gets sued and you have a sole proprietorship, they can not only take everything you've got, but they can attach future earnings. That means you're going to lose your residual income. So when you get a decent residual income, you want to incorporate, because then when they sue you personally, they can't get at your residual income because that's going to your corporation.
Okay.
Well, then it's true. We can get a lot of tax breaks by running an active Zango business. Exciting thing is that now there's a book written in plain English for people like me, that tell us exactly what they are, how to qualify for them, and what records to keep. You know, Tommy and I have read this book. We're excited about what it's done for us, and we strongly recommend your book, Ron. It's How Much You Keep that counts, not how much you make. Because it is the only plain English book I've ever had a chance to read that is authorized by Congress.
Well, we're really excited because Ron has agreed to offer a special Zango edition.
Yes, now you'll be able to go to Sound Concepts at mangosteentools.com, and you'll be able to get a special Zango edition of It's How Much You Keep that counts, not how much you make. And we want to really thank you for that, Ron.
Ron, I actually stumbled across your book, and when I ordered it, and once I read it, now I have so many Zango distributors asking me, well, how do I capitalize on these tax benefits? I just say, read the book. It will simplify your life.
And let me jump in, Tommy, and say that it will simplify your life, and it's simple to understand. This book really is easy to use. I've actually had people say it's fun to use. Nobody wants to study taxes. Nobody wants to even read about taxes. So this has been written in a way that you can actually enjoy learning about how to save a lot of money without having to be a student of taxes. It's a quick read, easy read, and it's really quick to use. So yes, it does simplify things a lot.
Couldn't agree more. If you're listening to this recording because you're thinking about becoming a Zango distributor, don't delay. Sign up and get active today. Let Uncle Sam pay for your startup costs and your operating costs.
And Tommy, some people are going to be tempted to think about this for a long time. Some will never make a decision. But let me say this. For every day you delay in making this decision, when you get up in the morning and ready to go to work, go to the kitchen window, open the window, and throw a $20 bill out the window and watch it blow away.
No, thank you.
The next morning, get up and open your kitchen window again, throw another $20 bill out the window, watch it blow away. Do that for as many days as you can stand it, because that's how much you're losing approximately in taxes by not having a home-based business, costing you easily $20 a day. Or another way to put that more positively is, what if you woke up one day a week, let's say every Tuesday morning, when your alarm clock goes off and you reach over to hit the snooze alarm, you see a crisp $100 bill on your nightstand with a little note on it saying you can do anything you want to with this $100 bill. Would you donate that to Uncle Sam? Of course not, but that's what you're doing. You're donating the equivalent of a crisp $100 bill every week to Uncle Sam simply because you don't have a home-based business that qualifies you for all these tax breaks. And so I would encourage people who are thinking about getting to Zango, stop thinking and jump in.
Wow, Ron, you know what? We thank you for giving our listeners this eye-opening interview.
And I want to thank you for giving me an opportunity to reach so many, many people with this information. This is a great opportunity because my passion is telling people about tax breaks they already qualify for in most cases but just don't know about.
Thank you so much.
This is awesome. Thanks again, Ron.
Ron, we certainly want to thank you for giving our listeners this eye-opening interview. It's been fun, and we've just heard that with an active Zango business, we can slash our taxes to the legal minimum. At the same time, we're going to help people to get into and run this business with zero out-of-pocket costs. We appreciate that so much. This is Carolyn Johnson, thanking you for listening.
And Tommy Johnson, helping you to earn serious money for helping others with their health and helping you to keep more of what you are earning. Go Zango.
I salute you for taking the time to investigate, to listen, to study what your options are. All change comes from an increased awareness. And particularly from a financial point of view, if you don't take the time to study and think and plan and do your thinking on paper, as Jim Rohn says, you're going to be victimized by taxation. You're going to be victimized by the system out there. And so I just salute you for taking the time and realize that you have here some tools and strategies at your fingertips that you can totally change your life financially. I just encourage you to really ponder your situation and the options that you have and this new knowledge that you have, and make good decisions and change your life financially. It's all about lifestyle and choices. Thanks for listening.